All trading is based on three simple rules, guys: strategy, psychology, and risk management. And it's precisely because of the third point that most people lose money in the market. Let's figure out what risk management is and how to open trades correctly according to proper risk management. Let's go. Okay, in the TradingView there are tools called long position and short position. You can find them here. For example, let's look at long position and apply this tool for the chart. So what do we see? We see that our current risk-reward ratio, RR, is 1 to 1. That means that our stop loss is equal to a take profit, which is not good. Okay, look in the table. If our stop loss equal of the take profit in the other world, so the risk reward ratio is 1 to 1, then our win rate, so it means the percentage of successful trades need to be 60% of 100. If the RR is 2 to 1, then only 40% successful trades are enough. So if 3 to 1, then just 30% successful trades are enough to be profitable. So which overall that are achievable even to a beginner trader. Okay, we take our long position and set risk reward ratio 3 to 1. So what does that mean? That means that you can look only trades where you can set your stop loss. Determine the entry points at the middle line. And take profit, you should logically place it right here, because only such positions with a 3 to 1, 4 to 1, 5 to 1 ratio should be considered by the persons who just starting to trade on the market. So right now I'm talking only about conservative trading. So the next, you go to the settings and enter your size position. For example, it's $10,000. Next, the risk. It's meaning how much you will lose if the trade goes against you. This tool will calculate it for you. And for the next step, I want to show you another table. So if you lose 10% of your account, you will need to make 11.1 to profit to get back to 100. If you lose 30% of your account, you will need to make 42.9 to recover. But guys, if you lose 90% of your account, first of all, I have a bad news for you. And second, you will need 900 to return just to get back to break even. Books on technical analysis recommend that your stop losses should be not exceed 2% per trading, and your total losses that should be not exceed 6% per month. So it will be good trading strategy for prop companies. That means that you should have no more than 3 trades open at the same time. As soon as the one trade is closes or stop loss is moving to break even, you can open a new positions. If all 3 trades end in a loss, you should go back, prepare trading, meaning to real trades until the next month, after you review and learning from your last mistakes. Well, that's what the classic lecture says. Objectively, you might look at it from different angle and will think differently, and that's perfectly fine. But it all depends on your win rate. So if your win rate is 60%, first of all, congratulations. And then you can occasionally take trades with a 2-for-1 risk reward ratio. In the case, your stop loss might not be limited to 2%. It could be a bit higher for 5%, for example. But let's go with the 2% for now, that we don't need adjust anything else. And we can click OK. So in the case the stop loss is triggered, we'll be left with $9,800. That is 10,000 minus 2%. Even the stop loss level will different, for example like this, the result will be still 9,800. It's because we control the dollar amount with the stop loss by adjusting the position size. So let's back for 3 to 1 risk rater, and we should enter with the position size shows here in the case 0.087 Bitcoin for a long position. If we had a different RR like this one, for example, we will be enter with the trade with 0.49 of Bitcoin. So that's the case, the stop loss is hit, we will be still lose no more than 2% of our account. And accordingly, the take profit level will be show right here, $10,400. Open this position with 20, even 15 leverage, it doesn't matter, because I have a clearly differently stop loss set exactly 2% from my entry point. So it doesn't matter what I leverage is using, I will still only lose $200 in this example, because the loss is controlled by the stop loss, not the leverage, guys. So okay, for a simple example that leverages doesn't matter, you can use simple Bybit calculator. It's right here. You need to copy entry price here and your take profit. Here is the close price. And how many bitcoins we need? 0.093. Okay, 0.093. Okay. And what leverage we can use? We can use 20's leverage, and we need only $471. If we need a second leverage, we use $4,718. So a simple calculator to calculate your position. Okay, what about margin? We have two types of the margin: isolated margin and the cross margin. So what is the difference? With the isolated margin, you can calculate exactly the amount of the money needed for a specific trade, no more, no less. If the position get liquidated, only the portion of your funds used for this particular trade will be lost. With the cross margin, you can use any amount of the fund from your account for a trade. But if your positions get liquidated, you lose all your money. So, if you use risk management and stop losses, you can have a liquidation. So remember this rule. So now I want to show you my 4 most recent trades which I made following this extract risk management rule. My risk reward ratio was 3-1 for all these 4 trades. I also used imbalance rules, MACD divergency, and breakout from strong levels. So in my first video, I will record in detail about my strategy in the future. Press like for this video, subscribe to my Telegram channel where I'm talking about trading, and see you soon, guys.